Welcome to our live Q&A session. My name is Natalie, and Minna, our Senior Account Manager here at Sense Financial. She'll be answering all of your solo 401k and self-directed IRA questions. We did have a handful of questions that were submitted, so we will start answering them shortly. But if there are any additional questions, feel free to type them up in the chat, and we will try our best to get through all of them. Also, just want to add that our next Q&A session will be on Monday at 11 a.m. I am going to just quickly introduce Minna before she starts answering the questions. As I mentioned before, Minna is our Senior Account Manager at Sense Financial. She directs the processing of retirement plans, and she assists and partners with clients in the process of creating their self-directed retirement accounts. She also coordinates communication efforts towards educating clients about self-directed IRA and solo 401k. So welcome, Minna. Thank you for joining us to answer questions today.
It's great to be here, and thank you everyone for joining us today. Look forward to addressing your questions.
Well, go ahead and jump right in. Our first question is from Olivia. She just wants to be informed about the solo 401k and the difference with a solo IRA.
Thank you for your question, Olivia. So I think that what you're referring to with the IRA component of your question is possibly a SEP IRA. If you're referring to something else, Olivia, feel free to reach out and we'd be more than happy to provide additional clarification. But regarding the question between the difference between a solo 401k and a SEP IRA, that's a great question. It is one that comes up often. So I will say that a solo 401k and a SEP IRA do share some commonalities. Number one, they are retirement accounts designed for people who are self-employed. And I will say a second commonality is they do appear to have the same contribution limit. So for 2023, I believe that contribution limit is $66,000. So there is a very high contribution limit with both the SEP IRA and the solo 401k. Those are the commonalities. And there are some important key differences between the solo 401k and a SEP IRA. So like I said, while they both have that high contribution limit of $66,000, for 2023, the SEP IRA basically only allows you to contribute to the SEP IRA in one capacity as employer. The solo 401k, on the other hand, allows you to contribute as both employee and employer. So in effect, the solo 401k allows you kind of two capacities or two opportunities to hit that high contribution limit. So that's one really key difference between a solo 401k and a SEP IRA. Another key difference is that the solo 401k, because it allows that employee contribution, it also has the catch-up contribution feature. So that's if you're 50 and above. And again, if we're just talking about 2023, if you're 50 and above, you can make an additional catch-up contribution as employee to the solo 401k. I believe the catch-up contribution is $7,500 for 2023. So that in effect raises your, maximum contribution limit for the solo 401k to, I think it's $73,500. So that's again another key difference, or a big key difference between the solo 401k and the SEP IRA. Couple more, the solo 401k also has the Roth component, which allows you to do rollovers of Roth funds into your, if you have a Roth 401k, you can roll that over into the solo 401k. You can do Roth conversions within the solo 401k. You can do Roth contributions to the solo 401k. So you have available to you that whole Roth component within the solo 401k. The SEP IRA does not have that. And then the last key difference, I would say, between the two, and not everyone utilizes this, but it is a nice feature to have, is the solo 401k has the participant loan feature. So you can actually borrow from your solo 401k as participant in the plan. You can pay back your solo 401k with interest. So that's a nice feature. Again, not everyone utilizes it, but some do. So hope that clarifies. Again, there are, some commonalities. And upon first glance, the contribution limit does appear to be similar between the two, but as you can see, the solo 401k has a lot more advantages. So if you qualify for the solo 401k, it's definitely a more advantageous retirement vehicle. So hope that helps.
Okay, we have a question from Sam. Can you review how to start and manage a business from an IRA? What can you not do?
Great question, Sam. Okay, so regarding what you can not do with an IRA, and specifically, I think you're referring to starting and managing a business with the IRA. So I'm so glad that you asked this question. You want to keep in mind that an IRA is a retirement account, and as a retirement account, it's designed for passive investing. It's actually not meant or not built to run a business through. So kind of to safeguard that ability, the IRS has a whole category under what they call unrelated business taxable income. So that's a whole, kind of category of knowledge. To boil it down, you just want to keep in mind that, again, it's not a retirement account like an IRA is not meant to run an active business from. If clients ever approach us about, questions about that category, we always recommend make sure you seek the advice of a CPA, particularly one who's knowledgeable about this category. It does come with a steep tax burden, so you really want to make sure that, again, you're working with someone who's familiar with this, who can kind of help you, navigate, kind of any potential actions that might fall under this category. So hope that helps, and thank you for raising an important question.
Okay, this question is from Kenneth. Is it true that buying dividend stocks in self-directed IRA defers income until required minimum distributions?
Okay, got it. Great question. So just to rephrase your question, so can you buy dividend stocks in an IRA and have the income deferred before required minimum distribution? So Kenneth, you can always contact us if I'm not quite hitting your question correctly, or if maybe there's some details that I'm missing. One of our team members will be more than happy to discuss. But I will say in general, with a self-directed traditional IRA, the investments in that self-directed traditional IRA are meant to grow tax deferred until a distribution is taken, like a required minimum distribution. So that's with a traditional IRA. With a Roth IRA, of course, it would grow tax free because the income is already taxed when it enters into the IRA. So that's kind of a general guideline. Again, if you've got some additional details that you want us to kind of consider as part of the situation, feel free to reach out, and a member of our team would be more than happy to discuss with you.
Okay, Jim is asking, can I make a contribution? Sorry, my screen just went out. Can I make a contribution to the pre-tax portion of my 401k if the funds are from another employer?
Great question. Okay, so the question is, can you make a contribution to your solo 401k from another employer? So great question. The thing that you want to keep in mind, the solo 401k is still a 401k. So meaning it's an employer-sponsored plan. There has to be an adopting business to adopt the 401k for its employees. With the solo 401k, that adopting business is your self-employment. So for when it comes to making contributions can only come from the business income from that adopting business. So I hope that clarifies. To answer your question, you would not be able to make contributions based on your business income from another employer. You could only make contributions based on your compensation from the adopting business of your solo 401k.
Okay, this question is from Riedel. If another company set up my trust for the IRS approved solo 401k plan, can I change companies?
Got it. Great question. So the question was, if a solo 401k was set up by another company, can you have Sense Financial kind of take over as for the solo 401k? So absolutely, and we actually have a good number of our clients come to us that way. That brings up a good point about solo 401ks. There are different types or kind of different structures. At the end of the day, like I mentioned, the solo 401k is an employer-sponsored plan where the self-employment is the adopting business of the plan. What I mean by different structures available are the typical or kind of well-known structure of a solo 401k is with a custodian. So that's what you would find as far as like the major brokerages when they offer solo 401ks. What they would set up for you is a custodial solo 401k. So you still can take advantage of the high contribution limits and so forth with that custodial solo 401k. But investment wise, you would be restricted to what that custodian offers. And anytime you want to make an investment with your solo 401k, again, you would be restricted to what that custodian offers, and you'd always have to work through that custodian to make any investments. What we offer at Sense Financial is a little different. It's a self-directed solo 401k with checkbook control. And what that structure does is, again, it's adopted by your self-employment, but it's structured so that a custodian is not needed, and then you've got control, checkbook control over your solo 401k. So what's nice about that is that you can invest in a lot wider range of investment options, both traditional and non-traditional. And because you no longer need a custodian, you can take advantage of those investment opportunities quickly because you're the one directing it and you don't have those custodial fees. So to circle back to your original question, absolutely. What you can do is you can contact us and we would do what's called a restatement, where we take your solo 401k as it was originally established. We will typically ask you for some of the documents from that original solo 401k so we can review it, make sure we understand how it was correct structured, and then we would restate that plan. So it's not terminating that original one, it's just restating it so that basically the solo 401k is now reliant upon Sense Financial's documents. And Sense Financial documents are also IRS approved. And those documents are what gives you or allows you to have that self-directed structure with checkbook control. So absolutely, all that to say, yes, we definitely do that. We've got a lot of clients who contact us for that very purpose. They've got a solo 401k, they want more investment capabilities with it, and we help a large number of clients doing precisely that thing. So feel free to reach out if we can clarify any further.
Okay, next question is from Costenzio. How do I transition my current account into an interest-bearing account in the future?
Okay, thank you for that question, Costenzio. So the question was, can you go from kind of a regular account to an interest-bearing account? And I'm assuming what you mean, Costenzio, is within the solo 401k. So like I mentioned, with our plan documents, you can, it gives you that checkbook control and you can set up the accounts at a large number of institutions. So in theory, what you could do is you could set up an account for your 401k at an institution that offers, those types of interest-bearing accounts. The important things that you'd want to keep in mind when you're setting it up, of course, is that the accounts are going to be set up for your 401k. So not for you personally, not for your business, but for your 401k, and then using the EIN of your 401k because the 401k is a separate entity from you and your business.
Okay, next question is from Zasha. How much can me and my company contribute to my solo 401k for 2023, and when is the deadline?
Great question. So we, of course, get a lot of questions about contribution limits with the solo 401k. And it's understandable because the solo 401k does have such high contribution limits. It is the topic of a lot of questions. So just wanted to mention, we do have a fair amount of resources that we've created, again, because this question is asked so often. And one of them I would point you to is on our YouTube channel. So Sense Financial does have a YouTube channel, got a lot of good videos there. This webinar will probably be there. But there is several that address contributions. And I did make one, I want to say in 2022, that talks about the different types of contributions you can make and the limits, and kind of, I think the deadlines are mentioned there as well, but that'll be a good video to check out. But just to answer your question about contribution limits to the solo 401k. So the solo 401k does allow you to make contributions as both employee and as employer. And both of those are calculated differently. For 2023, the employee contribution limit is $22,500. So that's for the employee contribution to the solo 401k. And the catch-up contribution, so that's if you're 50 and above, is that additional $7,500. So let's say if you're 50 and above, the employee contribution to the solo 401k for 2023 is $30,000. So that's the contribution limit for the employee contribution. In addition to that, you can also do the employer contribution. And that's actually going to depend, that's calculated not as a flat dollar limit, but as a percentage. And the percentage actually depends on the type of adopting business that you have. So for sole proprietorships and single member LLCs, the employer contribution limit for the solo 401k is 20% of your compensation. If you have a corporation like an S Corp or a C Corp, or your LLC has an S Corp election, you would also fall under the corporation guidelines. That would be 25% of your compensation. So in other words, from your W-2 figure. So that's for the employer contribution. You add up the employee contribution and the employer contribution, the combined total maximum is $66,000 for the solo 401k for 2023, or $73,500, again, if you're age 50 and above, because you had that catch-up contribution in addition. Those are the contribution limits. For the deadlines, it also, again, kind of depends on the adopting business that you have for your solo 401k. I would say kind of in general, or for most business types, there will be a deadline to elect to make the contribution, which is usually year end. So let's say if you go by the plan, if you go by the calendar year for your business year. So in other words, if you go from January to December, then you have up until last day of December to elect to make contribution, and then up until tax filing to actually make the contribution. So that's usually the following year. The key difference would be if you, again, have an S Corp, C Corp, or an LLC with an S Corp election, that employee contribution has to be processed through payroll. So then that typically would need to happen by the end of the calendar year. So I know I'm throwing out a lot of information. Again, we've got a lot of good resources on our website. We've got a video on YouTube, our YouTube channel that goes over this as well. If you didn't write everything down, it's all there. But again, feel free to reach out if you have any questions. Hope that helps.
Our next question is from Joseph. For a property held under a solo 401k trust, can the trustee be paid for managing the property?
Great question. So the question of, can the trustee be paid from the solo 401k for managing the property in the solo 401k? So this is important because it actually brings up the whole topic of prohibited transactions. So what you want to keep in mind is when it comes to the investments of your solo 401k, you are what the IRS deems as a disqualified person. So you cannot have interaction with the investments of your 401k. There is kind of some discussion about whether you can manage as far as kind of like base level activities, collecting rent checks and so forth. That could potentially, be okay. At Sense Financial, we always recommend, we're always going to take, kind of the conservative side. But this question was asking specifically about, can you be paid? And the clear answer for that would be no. You cannot be paid from your solo 401k, again, because you are a disqualified person. And so that would definitely fall under the category of prohibited transactions. So make sure that you're clear on that. We've got a lot of resources that cover prohibited transactions as well, because it's so important. So you can always look on our website. We've got some good articles that kind of describe it in a little bit more detail. And then if you've got any questions, you can always reach out.
Okay, next question is from Deep. Can we use solo 401k for tax lien investing and real estate syndications?
Great question. So can the solo 401k be used for investments like tax liens and syndications? So absolutely. And that's actually what a lot of our clients like to do with their solo 401ks. One thing I would just say to keep in mind when you're investing through the solo 401k, and this is kind of regardless of what you're investing the solo 401k in, is make sure that you're titling those investments in the name of the solo 401k and using the EIN for those investments. Again, because it is a separate entity from you, you want to make sure it's your 401k doing those investments. So all of the titling, all of the information, all the funds would be coming from the 401k and not connected to you personally.
Okay, this question is from Jane. How are taxes and capital gains handled after a sale of a syndication purchased in a 401k?
Great question, Jane. So the question was, how are taxes and capital gains handled from a sale of an investment of the 401k? So the investments of the solo 401k, just as a general rule, they're going to be made from so the funds for the investment will come from the 401k, and then they'll flow right back to the 401k. And like I mentioned before, the investments in the solo 401k are meant to grow tax deferred until a distribution is taken. That's again for a traditional funds within the solo 401k. So again, all of those things would just flow back to the solo 401k until a distribution is taken.
Okay, this question is from Kim. How do you do required minimum distribution for real estate owned by a checking account IRA?
Good question. So regarding required minimum distributions from an IRA or a checkbook IRA, so the checkbook IRAs, of course, they do have an IRA and an IRA custodian. For required minimum distributions or RMDs, you would need to have cash available to take those. So you will need to have, some liquid in your checkbook IRA, and then you would work with the IRA custodian on taking that required minimum distribution.
Okay, and our last question that was submitted is from Cameron. Can I move stock from my personal account to solo 401k and then to solo Roth?
Okay, great question. I'm going to take it in two parts because I think there are kind of two different things that you're describing there, Cameron. So regarding, can you move personal stocks into the solo 401k? So let me address that first. So the solo 401k, again, is a retirement account. And the two main ways that you would get assets into that retirement account would be through rollovers and through contributions. So Cameron, if you're describing stocks that are, in an account for you personally, not a retirement account, you would not be able to get those into the solo 401k. Now, if you're talking about a retirement account that you have stocks in, it might be possible to roll those over as like in-kind assets into your solo 401k. there's a little bit of work that you might have to do with that, kind of coordinating it with the current custodian, and you can reach out to us and we can discuss that further if you like. So that's the first kind of component of your question. Again, funds and assets can only enter into your solo 401k through rollovers from other retirement accounts or contributions from the business income of the adopting business. So that's, again, the kind of the two main ways. Now I want to address kind of the second part of your question about once assets are in the solo 401k as pre-tax or traditional funds, moving them into Roth. Okay, so that refers to what's called a Roth conversion feature, which your solo 401k does have. So what that means is once you have assets in your 401k, you can actually convert them to Roth within the plan. That applies to, cash that you have in your 401k. You can convert those to Roth within the 401k. Assets can also be converted to Roth. Let me tackle the first one first, just because it's simpler. So if you have cash and you want to convert them to Roth within your solo 401k, basically what that would look like is you would complete a Roth in-plan Roth conversion form to document that. And then you would want to establish a separate account for those Roth funds. We definitely recommend keeping the pre-tax and the Roth funds separate. So you'd want to have a separate account for the Roth funds. You could move the funds from the pre-tax to that new Roth account within your 401k. And then in January of the following year, you would be responsible for issuing a 1099-R so that you would include the amount that you converted to Roth within your taxable income for that previous year. For 1099-Rs, if you're a client of Sense Financial, we're happy to help. We assist with that, but it is by request. So what we'll do is we'll issue kind of a reminder for those requests, usually at the end of the year or the beginning of the year, and then we'd be happy to assist with that. So one quick note, just to make sure I complete the whole, all the aspects of that question. If you have an asset within your 401k that was purchased with pre-tax traditional funds and you'd like to convert that to Roth, it is possible to do that as well. What you would need to do then is evaluation on as close to that conversion date as possible. And then the following year, when you issue that 1099-R, it would be for that amount that you converted to Roth the previous year. So I hope that helps.
There are questions in the chat. Do you want to go through those, Minna?
Okay, great. Okay, so I'll just go through as many of these as we can in the time that we have remaining. So first question I see is, if you earn less than the contribution limit, does that affect your solo 401k contribution limit? Thank you for that question. That's a great question. Yes, because you can only contribute, based on the amount that you earn. So you would not be able to contribute more than you earn. So let's say, with your adopting business of your solo 401k, you make 10,000 for the year. You can contribute that full 10,000 under the employee contribution or as an employee contribution, but of course you would not be able to hit that, the maximum limit, because again, you can't contribute more than you earn. Let's see. Oh, I apologize. You had a follow-up detail to that. So you included the example, if I earn 50K, can I still contribute the max? Okay, so thank you for giving those figures. So like I said, the employee contribution limit is 22.5. So let's say if you earn the 50K, and I'm just gonna, for the sake of this example, let's say if you adopted the plan as a sole proprietor, and I'm gonna just, again, for sake of example, if you are under the age of 50. So you could potentially make the full 22.5 employee contribution limit. And then what you could do for the employer contribution limit is take 20% of the 50K as your employer contribution, and then you add those up, and that's your total contribution that you can make for the year. So that just kind of, again, highlights what I mentioned. They're both calculated separately. The employee contribution is more like a flat, dollar limit, and the employer contribution is a percentage. So you'd have to kind of do those numbers. One thing that I'll mention here that's a helpful tool on our general website, SenseFinancial.com, we do have a contribution calculator where you enter in, I think, your age as well as the type of business that you have. You can enter in some figures and kind of play around just to see how those factors affect the contribution amounts that you can make. So I hope that helps. Your question, again, feel free to reach out if we can clarify anything further. I'm going to go ahead and read the next question. I have a personal stock account outside my solo 401k and solo Roth account. I am over 50 years old, so I can contribute up to $30,000 in my solo 401k account. Assuming that I have a stock values $2,000 in my personal account, can I move that stock to my solo 401k based on its present value of $2,000 and reduce the cash contribution from $30,000 to $28,000? Second, if the first is possible, can I then move that stock from my solo 401k to solo Roth and pay taxes on $2,000, the value of the stock? So I think I hit some of those points in my responses to the other questions. But again, if I'm not quite, kind of scratching where you're itching, feel free to reach out, and we'd be more than happy to discuss further. But for an initial answer, I would say no, because again, remember, contributions come from your compensation from the business. What you're describing is personal stock that you have. That would not be, you're not being paid in that personal stock. It's just a personal asset that you have. And again, any contributions that you make is going to be based on your earnings, the business earnings from the adopting business. So no, you would not be able to utilize your personal stock as part of that compensation and then contribution. The second part of the question, again, provided that you're not making the, you're not moving that personal stock, but if we're just talking about Roth conversion, then I think that was answered a question or two ago. So hope that helps. I'm going to read the next question. What are advantages versus disadvantages of borrowing from your SEP IRA versus just writing a check and directing the funds toward an investment? I'm guessing that there might be some clarification that's needed, but just to answer the question at face value, so you're referring to a SEP IRA, but remember, a SEP IRA does not allow you to borrow from it. So in your question, you would have to, kind of cross out the whole first half. As far as advantages versus disadvantages of borrowing from your SEP IRA, that's actually not possible. You're not allowed to borrow from an IRA. Yes, so I hope that answers that question, but I'm guessing that there might be some follow-up, and feel free to reach out. We'd be more than happy to discuss. I'm gonna just keep going here just for the last few minutes. I have a solo 401k with a particular stock. Can I move that in my Roth IRA account and pay taxes on the value of that stock? So if I were to take that question on face value, then you're referring to rolling stock out of your solo 401k into a Roth IRA, because an IRA is a completely separate thing from a solo 401k. But if I'm taking your question as if you can move it to your Roth 401k account, so in other words, like that Roth conversion topic that we discussed earlier, then yes, you could do a in-plan Roth conversion with an asset such as stock within the 401k, and then you would pay taxes on the amount of that conversion. Feel free to reach out again if maybe we're missing some details about that question. Next question. So the main difference between your solo 401k and your checkbook Roth IRA is pre-tax versus post-tax. Other differences. Comparing a solo 401k and a checkbook IRA, there's definite structural differences. A checkbook IRA in general is a little bit more complex to set up and to maintain. And then the solo 401k, you have to qualify for it on the basis of self-employment. So that's a structural difference, also an eligibility difference. But you are correct in your question here, Erin, that the solo 401k does allow pre-tax funds and Roth funds, whereas a checkbook Roth IRA, because it's got a Roth IRA as part of it, just is just built for Roth funds. So hope that answers your question. And then I'm going to kind of throw in a couple more questions because I think we just have two more. Hi, would it be okay to flip a house under your solo 401k to grow funds to purchase more rentals? That is a great question. And the reason why I say that is that actually brings up the topic of, I kind of mentioned it before, but that whole unrelated business taxable income. So flipping a house can, or flipping in general, kind of falls within that gray area of, is that an active business? There's no, as far as I know, there's no hard and fast IRS guidelines as to what defines, when does flipping turn into an active business. So you do want to be careful. Because like I said, if flipping was construed as an active business within your 401k, then you could have, a pretty high tax bill for the income related to that activity. So that's, like I mentioned before, something that you really want to get the advice of a CPA who's particularly well versed in the whole area of, it's called UBIT, UBTI, unrelated business taxable income, just to kind of make sure that you're not kind of hitting that, you're not going over into an active business. And then I'm just going to address the last question real quick. I have an LLC for 2022. I have earned 90K, age 74. May I set up a solo 401k? Would I then be required to take an RMD in 2024? Thank you for that question, David. I know we've got some good resources on RMDs. I'd have to check it because there has been some differences, changes more recently related to the Secure Act. So I know that the age has been changing. So I'd have to look at that just to make sure I answer correctly. But just to, in a general sense, could you set up a solo 401k? That would depend if that LLC does represent your self-employment. And one thing I would add here, it does need to have active business income, not just passive. So if that LLC, for example, is set up just to hold investment properties and rent is coming in, and that's kind of the only income, that would not be enough to qualify you for a solo 401k. You'd have to have, kind of active business activity in order to qualify for a solo 401k. So everyone's situation is different. We are happy to hear from our clients and anyone who's interested. We feel it's important here at Sense Financial to kind of hear the details and hear the details of your particular situation as well as your goals. So please contact us, and we'd be more than happy to discuss the particulars with you. So thank you so much for sending these questions. They were great. I hope we answered them, and was happy to spend this time with you.
Yeah, thank you, Minna, for answering all the questions. This concludes our Q&A session today. Thank you, everyone, for joining and submitting questions. We hope that you are all able to join us at our next live Q&A session. Again, it's Monday, November 6th, same time as 11 a.m. Pacific Standard Time. If there are any questions that we weren't able to answer today or didn't get a chance to, feel free to reach out. We'd be happy to further assist you. But again, thank you everyone for joining, and we hope you have a great day.